I have a little a tip for people, which is that there's a free tool from Blackburn and Darwen Council, which, although it's up north, it actually enables you to search every funding opportunity from funders for free. Because part of my role in my Places for People is around fundraising, and it's very useful. It's basically the same as the Directory of Social Changes Index, and you can access it for nothing if you just sign up to their council funding tool. So it might be quite helpful for some people, particularly because it covers I think nearly every small trust and foundation as well.
Amazing. Sorry, what do you have to do? You have to sign up through?
Called Blackburn and Darwen Council. I was just typing it out actually before I started. I'll put it in afterwards, but it's basically the same information as which is included on the Directory of Social Change, which I think costs £500 to £1,000.
Yeah.
It's basically free if you sign up to the Blackburn and Darwen Council funding finder, because I look at it every week for funding opportunities as part of our charity, which is within our group. So I'll stick the link on that in a minute.
Perfect. Thank you very much.
There's hundreds of small foundations which do, you know, a couple of £1 million a year. There's the big players, and there's also lots and lots of small trusts and foundations who do funding too. So I'll put that out later on.
Perfect. Thank you, Marcus.
All right, thanks, Charlie. So hello everyone, I'm Marcus Hulme from Places for People. We're a housing association and property company and leisure business who work across the UK, and one of our developments is next to here east. It's called Eastwick and Sweetwater, and so as part of our big commitments to the London Legacy Development Corporation, part of our roles around delivering social value, delivering social impact around Hackney Wick and Fish Island, as well as the 4 host Olympic boroughs. So what I'm going to talk through today is a little bit of an overview about social investment, because I've got a background in that and I thought it might be quite useful for some people. And so I'll talk a bit about social investment, a bit about a thing called the Resilience and Recovery Loan Fund, which is about to launch. I'll mention a bit about the Growth Fund, which is from us, which is one of our big commitments at the development. And then I've got some links to further information. So I'll just whiz through these slides quickly. So first of all, if this is new to you, I thought, what is social investment? So basically, it's the use of repayable finance to help an organisation achieve a social purpose. So it's not free money, it's repayable with interest, and it's usually in the form of loans to charities who generate surpluses through trading or contracts, or through grants or donations, or through cross-subsidy models. And the way it works is that it's always repaid, so it's not free money, it's always repaid. It's often appropriate for organisations who can't access mainstream finance, and it can often be it's often around priced somewhere between 3 and 10% per annum, depending on what the product or the level of risk is. On the right of these slides, I've just done a few examples of different social enterprises to bring it to life. So this one on the right here is Second Shot Coffee. Some of you might know it in East London. They accessed money to help them start up through a thing called social investment tax relief, and there's an interesting case study and point of ways people are using social investment. The 3 main uses of social investment really, which are around maintaining cash flow, which is relevant at the moment. So that could be working capital, or a bridging loan for organisations who know that money is coming on somewhere down the line but need working capital now. Sometimes social investment is used for buying an asset. So charities might purchase an asset which they then might let out a portion of it to generate income, or they might deliver services which deliver an income. And again, worth saying that assets, the value of them can go up as well as down. And then some organisations use social investment to pilot or start a new service. So that could be taking on money to grow a service which then they sell to a commissioner or to a local authority or to an NHS provider, which then generates income, which then pays off the debt. And so here's an example on the right here of an organisation called Local Food Links, and they provide school lunches to primary schools. So that's how they generate their revenue. And they took a loan from Cath Venturesome to grow their organisation. So again, it's doing social good, it's making an income which then pays off the debt. So that's about growing new services. Basically, there's a lot of different products in the social investment market which can be quite confusing, but it really comes down to 2 things. It's either debt, i.e. loans, or it's equity. But there's different models here. So there's things called charity bonds, which is when a charity might issue a bond to raise money, which could be for buying property, it could be for delivering a service. There's a thing called social impact bonds, which were all the rage a few years ago from the government and still going on, which is a payment by results service. So an investor puts up the money, a charity or a social enterprise delivers that service, which has a positive social impact. And then the commissioner, government or local authority will pay by results, which then repays the initial investment. There's community shares, which are quite popular and backed off by organisations such as Power to Change, where an organisation issues shares, which could be shares which generate an income or shares which are in a form of which don't generate an income, which is quite a popular model. There's what you call blended finance, which is where an charity or social enterprise will take on part grant, part loan. So you might say borrow £100,000, 50 of which is a grant, non-repayable, 50 of which is a loan, which is repayable. Crowdfunding, there's an initiative called the Crowd Match Fund, where social investors will match any money raised from the crowd. There's a thing called quasi-equity, which is like equity, but it's for organisations who can't take on equity, whereby the investor will take a share of the revenue portion. So equity can only be issued by companies limited by shares or KICs. It can't be issued by companies limited by guarantee. So there's 7 key questions really to think about when thinking about investment really. So is it right for you? If you know, it's only really right for you if you generate revenue which can service a debt, which can pay off a loan, then it could be right for you. But if you don't generate enough revenue to pay off a lending facility, then it's probably not right for you. Thinking carefully about how much you want to raise, how it will be used, what's your revenue model, and a social investor will always ask, what's your revenue model? So how will you generate income which to pay off a debt? Do you have a good business plan in place? They'll often look for like cash flow, solid business plan. What's the impact you're seeking to achieve, and how will you measure it? So unlike commercial finance, the social investors rather will look to see that they're interested to see that you deliver both a social return and a financial return. Do you have the right legal structure in place, and do you have the right people, resources and time to take on investment? And just on the right here is another example of how social investment can be used. This is an organisation called Freedom Bakery. They teach prisoners how to become bakers, and so and then they sell the products produced by the prisoners. And the way that was funded is again through a tax relief, and so that's how they set themselves up. Who are the social investors? There's about 50 of them, but here are some of the main ones. So some of you would all of you would have heard of the Big Issue, but the Big Issue also run a thing called Big Issue Invest, which is a fund manager business. They run several different funds. Probably the most relevant one here is called Impact Loans England, which provides loans, I think, from 50 to 150k. Charity Bank are a bank who provide lending. Again, it can be as small as from 10 grand upwards, probably more likely around the 100,000 mark. Unity Trust Bank are a large lender, set up originally by the trade unions. Unlimited, as mentioned before, a big organisation who often provide early stage funding and support. A Co-op Foundation do lending. Social investment business, who we'll come on to in a moment, do lending and support, and the support there is in the form of grant funding as well to help you develop your business model. Crowdfunder often raise investment for people, and as do Nesta. Nesta run the Arts and Cultural Impact Fund as well at the moment, which is relevant. But the main response from the sort of social investment market over the last couple of weeks has been this thing called the Resilience and Recovery Loan Fund. And that's basically trying to help charities and social enterprises it's established to make the business interruption loan scheme more easily accessible to charities and social enterprises. And it's intended to provide loans which could provide a bridge until receiving payment through contract furlough, etc. It can cover delay in trade payments, i.e. from trade debtors, or it can help organisations who need to scale or due to increased demand, so they can expand more rapidly. And this is only open to social sector organisations, so charities and social enterprises, registered charities, community interest companies and community benefit societies. And this is due to launch imminently. I think Monday there's a webinar about this, which I'll put the link up at the end of this presentation. So it's being finalised now. The challenge here, loans will be between 100 to 500k, which may well be too high for a lot of charities and social enterprises. And so I've contacted them this week to find out, will that go any lower? Because I think there'll be a demand lower than that amount too. And the response is, I believe that they're going to look at this every 2 weeks, see where the demand lies, and consider revising this threshold. The loans will be interest-free and fee-free for customers for the first 12 months, which was paid for through the government. As I say, the loan range will be revised, and the intention is that the first loans will be put out there by the start of May, and the application process should be from 2 to 4 weeks from start to finish. The social investment business are managing this fund, so I'll put the link in there to the social investment business if that's relevant to your organisation. So that's mainly a quick canter through the social investment market. Then it's worth just mentioning about our Eastwick and Sweetwater growth funds. So as part of our bid commitments to the LLDC, we said that we would invest 500k over 10 years to support SMEs and social businesses across the 4 Olympic boroughs. And so the idea here is that we'll launch this fund towards the end of the summer. We're waiting for the 1, finalise the details, and 2, to get it signed off by our board. And the idea is that we're looking at is we want to provide loans of between, say, 2 to 25k. We're flexible about that, but that we think the demand seems to be around that mark for up to 5 years, for priced at about between 3 and 7%, depending on risk. And the idea is that repaid loans will be recycled and invested again, so the money comes in, comes back, comes in, comes back, and supports more businesses over time. What I'm keen to try and do is use this money to raise what we might call a place-based fund. So a lot of social investors are interested in what you call place-based investing at the moment. So we're going to try and increase this 500k to a larger amount. And so we're in early discussions about trying to turn this into a place-based fund of a larger amount so that we can support more SMEs and social businesses across the 4 Olympic boroughs. And that's due to launch, as I say, hopefully in August, September time. So it'll be about recovery and growth going into the future. And again, important to stress here that it is repayable. I've included 4 links here, which I hope you'll find useful. The first is a website called Good Finance. So this is the kind of go-to place about social investment if you're new to it. It's got information, advice and guidance, details about the different investors out there, details about the different types of grant support available to help organisations with capacity building. And that could be developing a business plan, that could be around cash flow. And it's a really, really useful resource of information about social investment if it's right fit for you. And there's different diagnostic tools on there, and there's lots and lots of information to help. I was reading the other day to see what the startup loans company was doing, because again, they're backed by the British Business Bank, and the British Business Bank have said, I've seen, they've advised people if they're operating under 2 years to consider applying for a startup loan, which can be up to 25k, which I believe is priced at 6% a year. So again, that might be a useful resource for some organisations. The Access Foundation for Social Investment manages a thing called the Growth Fund, which provides the blended finance, which I spoke about earlier. So that's usually 50 to 150,000 pounds for charities and social enterprises. It can sometimes be slightly lower. And then Social Enterprise UK are the umbrella body, or the sort of go-to place for social enterprises in the UK. And I noticed yesterday that they're running an online workshop on Monday about current finance and business support for Social Enterprise UK, and they're the real experts in this area. So I recommend signing up to that as well if you're a social enterprise and interested in finding out more about the support available. So that's it from me, Charlie. Just a quick overview there.